Hey folks, Nick Allerud here with AA Real Estate Group and Ascension Capital. I just wanted to do a very quick tutorial for those of you who are new with K1s or Form 1065s. So Form 1065 or a K1 is the document that you will receive from the partnership every single year before tax time, preferably before April 15th. This year we had some challenges, but we're going to be on track for next year and which is normal for the first year of any partnership. But I wanted to show you what that means. What that means is you are an actual owner in the project, right? So therefore, you have a share in the net income or the net losses for tax purposes. So one of the benefits, as we talked about with real estate, is that there are significantly higher depreciation in a lot of the real assets and tangible assets that we have. But we'll get into that as we see the K1. Just want to kind of share with you how these numbers all formulate, right? So here's an example of one of our partnerships. This is only for half a year. We've only had this one for half a year, but you can see kind of the rough numbers. This comes straight from the purchase of the profit and loss statement. And the CPA prepares all this. And I want you to really just pay close attention to this one down here. So in A, as we go through our gross income for the park, then we have a whole bunch of different expenses down here. You'll see here is our depreciation, which this is just year one and it's normal depreciation. We have not yet done a cost segregation or used the bonus depreciation that is in place. So that will go higher as we improve the park, especially this year, and we do a cost segregation study. And then at the end of it, you see this number here, 121,984. So this is the important number. Now, you'll take your percentage interests, right? Or the CPA does all this. Our CPA, Gina, does all this for you. So our CPA then looks at the operating agreement and takes your percentage interest in the project and allocates it from this number here. So we'll look at one of these here so you can see what this looks like. So here's a K1. And she took that exact number that you just saw, this 121,984, and this particular investor, you can go down here first. Oops. And you can see this particular investor has an 8.62% share in this project, right? So with an 8.62% share, this is what we all kind of move into. If you're an investor or an LP in one of our projects, you will always, no one's ever responsible for the debt. That's why it shows up here in non-recourse for that portion of the debt. So you don't have to worry about that. And really, this is the part that everyone cares about, is this box L down here. But if we go up to the top just to explain it anyway, 8.63%, or I'm sorry, 8.62% of the 121,984 is this number here, 10,515. This is classified as rental real estate income, which is treated more favorably than business income or personal income, which is good. And as we go down here, you'll also see in box 19 distributions. So this partnership issued one of a catch-up of the preferred return payments. This one just happened in December. So what that is essentially it's a distribution from the project, right? The very first for this one, I believe it's an 8%. The very first 8% of the project gets paid out to our LPs to show them how we're aligned with making sure this part succeeds. So once that happens there, that all gets carried down into box L. So box L is what you guys would care about, right? So it talks about what your capital contribution was to the project. It adds in the net income or net loss of the project. It does happen where we have a net loss on paper, but there are cash flow distributions. I mean, that's the ideal situation, right? Where we're taking paper losses, but actually receiving cash flow in. But this one here, 100,000, adding the current year portion of this investor, so 10,515. There was 4,000 distributed of their capital account for a preferred return during this year, which leaves their capital account at 106,515. So you don't really have to do anything with this except hand this to your CPA. The CPA is going to take all the information they need off of this. But this is kind of the basis right now for this investor is 106,515 after the year end. And And let's see, we're gonna go to page 2. So in this particular entrance, because we do have interest, we have loans on almost all of our assets. So this is just a note from the CPA. Some of your CPAs will need this, but most of them won't need this or care. This is not applicable to most people. But there's a note in there as far as what portion of that is allocated towards the business interest expense or the debt, the mortgage interest on that. And then here it is. This is really the number, right? The K1 partner share of income deductions. This is the number that carries forward under the return. Important to note, if you are an IRA holder, you have a self-directed IRA and you have money with us through that. There might be a third form where because we do have debt on a lot of our projects, some of that is subject to what we call UBIT tax, unrelated business income tax. Again, you don't really have to do much with it. You would just take this K1, hand it to your CPA. But if we are subject to UBIT for that year, most times if there's a net profit and we have a significant, like a loan on the property, you will have to file your own 990T, or your CPA will file a 990T on behalf of your IRA. It's like your IRA return for that year. So emails did go out about that. If that is the case, you'll want to check with your custodian to find out if they will set up the EIN for you, if this is your first time doing that, or if they want you to set it up. And if they want you to set it up, we have a checklist, like you go to the IRS website where the EIN is, and we can bring you right through that process with like a 6 quick Q&A, and you get your EIN number right after that. And we use that for your K1. Okay. So hope that helps explain what a K1 is, how to kind of go through it and review it. Looking at your account capital, your capital account down here is really what most people look at. And if you have any questions, don't hesitate to reach out to us. And if we cannot answer it, we will refer you to Gina, our CPA, who is amazing and awesome in every way. And all of these financials obviously are communicated to you through the portal. So make sure you log into your portal access. We'll obviously send out emails as soon as we upload anything in there. So when K1s are uploaded, or P&Ls or tax returns, you have access to everything. But the K1 is the only document that you need to give to your CPA for tax purposes. Hope that helps. And thank you again for the trust, and see you in the next update.